So, how do you spell volatility? I spell it W-A-R. Right at this point, we should be hearing War by Edwin Starr in the background. I don't know if we can do that or not, but if Jocelyn can work his magic, you'll be hearing it right now. If not, you can just hum along. But at any rate, that's what you got in February of this year. So this is Steve Wolff with the market recap for February 2022. And if you like your eggs with lots of hot sauce and a few jalapenos and habaneros, then February was definitely the month for you. Now, before we really get started here, let me get the disclaimer out of the way. I feel like Mr. Green Jeans here. I've got papers all over the place. I don't know how many of you remember Captain Kangaroo, but Mr. Green Jeans was his sidekick, and he had stuff in all his pockets. Anyway, so what I'm about to say is strictly for informational purposes, and it's not meant to be a recommendation. So before you buy or sell anything related to what I'm saying about the markets or individual securities, be sure to consult your financial advisor to ensure it's the best recommendation for your personal situation. All right, we got that out of the way. Now, let's talk about what happened. Oh, my God. We've had enough volatility here in the last month or two to last a long time. And, of course, this is all because Russia decided to invade Ukraine. Now, remember, we were already reeling a little bit here because of inflationary worries. The market really got hit, especially small growth stocks. But lately, it's been more than just small growth stocks. As a matter of fact, if you want to know what happened here in the market, and now you have to know that I'm taping this slightly before the market is closed. So I'm just going to give you an approximation, unless there's a huge gain over here in the next 45 minutes. For the month of February, the Dow was down around 5%, S&P down around 4.6%, and the NASDAQ around 4.7%. Year to date, the Dow is down about 8.3%, S&P is down about 10%, and the NASDAQ down about 14.25%. And since the tops, which happened sometime between November and January and happened differently for a different index, the Dow Jones is down 9%, the S&P is down 10%, and of course the NASDAQ with the tech-heavy NASDAQ was down about 16%. So you can see that it's been a rough market here so far in the last 2-3 months. And I'm sure that as you look at your statements or you look every night, however you do it, you've seen things have gone down a bit. So that's what's happened in the equity market. What's happened in the bond market? It's been interesting because about as soon as the bombs started dropping and Russia started going in, or at least they thought they were going to go in, the bond market really spiked. And in the beginning of the month, the 10-year bond was about 1.8%. It spiked all the way to about 2.05% in the middle of the month. And right now, that's based, by the way, on the U.S. Department of Treasury site. And then CNBC, as of today, said that the 10-year Treasury is about 1.85%. So it has pulled back a little bit. At the beginning of the year, the Treasury bond, the 10-year Treasury, was at about 1.63%. So we're still going in that upward direction, and that's because people are pretty nervous about inflation. Forget about the war for just a minute. I mean, inflation still is front and center, and I have a feeling that really will be what ends up affecting the market more so than this war. Now, it's interesting, though, and there's some issues here. I mean, I understand from what I heard this morning on the news that Belarus, who is a Russian ally, is talking about helping them go into Ukraine and fight there. I'm hearing that Europe is starting to say, hey, we need to give Ukraine more money and more artillery, as is the U.S. So we'll see what happens. We'll see. In the meantime, it's interesting. I saw an article in Think Advisor, which is one that most people have probably never even heard of, but it talks about what's happened to the markets after some major global disasters. And the first part of it is I'm going to do about what happened when Iraq invaded Kuwait. Well, that was in August of 1990. 12 months later, the stock market was up 10.1%. When we started the Iraq War, which was in March of 2003, 12 months later, the market was up about 26.7%. Now, in those cases, in the first case, we were near a recession. In the second case, we were not. And that, as I'm looking at some of these things, does make a big difference. Now, what happened when Russia annexed Crimea back in 2014? Well, 12 months later, the market was up 14.7%. So now let's look at some of the things that happened because there's been a lot of bombings. So let's look at those things. The first World Trade Center bombing, which was back in 1993, 12 months later, market was up 4.7%, but we were not near a recession at that point in time. Now, in October of 2000, when the USS Cole Yemen bombing happened, that was in October, 12 months later, the market was down 19.6%, but we were definitely going through a big recession then. So again, I think it had more to do with the recession than the bombing. The Madrid bombing in March of 2004, 12 months later, we were up 8.4%, not near recession. London subway bombing in July of 2005, 12 months later, market was up 5.5%. The bombing of Syria in April of 2017, the market was up 12.8%. And of course, for us, one of the worst bombings, obviously, is when we were attacked back in September 11th of 2001, and we were going into a recession, and that was a pretty bad time. 12 months later, the market was down 18.4%. So we really have to look at what's going on in the stock in the economy right now. The economy itself is strong. I mean, it's one of the reasons that inflation is higher. You know, there's been tremendous demand for goods. Of course, we've talked about this many times in the past about the supply chain being disrupted. And of course, that is part of the reason that prices are up. Oil is up. Wages are up. So the Fed has to do a little bit of a tightrope walk here. But I'll tell you what, small businesses, they're not waiting around. Here's an article from thestreet.com, which says that the net percentage of small business owners increasing their prices rose to 61% in January, the highest reading since 1974, and up 57% in December, according to the National Federation of Independent Businesses. So this inflation spiral that we have, where higher prices for raw goods lead to higher prices for finished goods, which lead to higher wages, and then rising wages push prices up even further. And David Einhorn, who's the founder of Greenlight Capital, according to this article, says that he thinks that this is all going to cause us to go into a recession. And maybe it will. I mean, the bull market here has been there for a long time. He's teetering right now. I know I got him laying down, and the bear seems to be getting a little bit bigger. It's possible. But remember, the stock market is a forward-looking device. So a lot of stocks have already gone down. Have we gone down enough for a bear market? Maybe not, especially in the bigger companies. Bigger companies have held up better than the smaller ones. So we'll see what happens. But we hit the correction territory here in February. And just to let you know what happens, this is an article that was in Barron's this morning, actually. And it says there's actually good news, that stocks do tend to perform well just after they enter correction territory. The average S&P 500 gain for the 12 months following a close into correction territory is up 9.3%, dating back to 1998, according to the article. And they get their statistics from the Dow Jones market data. The index sees gains in that time span about 2/3 of the time. So that's pretty good news. And when the index doesn't post a gain for the year following a close into the correction, then it's often because there's a major economic problem, which is what we've been talking about, that we really have to take a look at what's going to happen with the economy. And obviously, the war is the big thing right now. Inflation is there and it's going to continue, but the war is the big thing. Hopefully this isn't going to spiral out of control. If it does, obviously all bets are off. So we'll obviously be looking closely at that. But in the meantime, I don't know if any of you noticed this or not, but I've got a little growth going on here. I know hardly anybody knew this, but I had COVID for a couple of weeks, and I was following in the footsteps of my producer, Jocelyn Magana, who also was staying home because my partner, Catherine Magana, had COVID, and he grew a goatee, which, by the way, his looks way better than mine, but he grew a goatee during that time. So this is my COVID goatee. Now, how long it stays is anybody's guess. I was going to hang on to it until the Dow Jones was at 40,000, or my wife says shave it, whichever comes first, and you guys can probably tell me which is going to happen, because she does not like me in a goatee. She says she doesn't like kissing me. What are you going to do? So anyway, I will be back next month. I'm going to take a week off. I'm going to take a vacation. I'm going to Hawaii for a week. I'm going to take my family. We're going to enjoy it. I'm going to take that week off, and I'll be back next month to recap what happened in March. Until then, happy investing, everyone. See you then.